Greetings, curious minds! Welcome back to another deep dive. We take stacks of information, find the juicy bits, and lay them out for you. And hey, before we jump in today, just a quick thing. If you enjoy these deep dives, hitting subscribe, maybe leaving a comment, sharing it, it actually makes a huge difference. Yeah, it really helps us out with the algorithm, lets us keep making this kind of crypto content for you. So thanks in advance if you do. Okay, today we are plunging into the, let's face it, really fast-paced world of crypto launchpads. Specifically on Solana, we're looking at a newcomer that's, well, not just making a splash, feels like they're setting some serious new benchmarks, and incredibly quickly, too. Our mission, to unpack the, frankly, meteoric rise of the Heaven Launchpad. We'll get into its tokenomics, which are pretty interesting. And there's a big team commitment that's got people talking. We'll explore why it matters, what it means for, the whole Solana ecosystem, and what we can learn.
Exactly. And in a space like crypto, which changes so fast, understanding why something grows explosively is, well, it's crucial, isn't it? We'll connect the dots today between Heaven's really impressive early numbers, their unique economic model. We'll definitely get into the weeds on that, and some strategic moves they've made. These aren't just driving market share. They could actually be reshaping how investors feel about new projects in general. It's a fascinating mix, the meteoric ascent of Heaven Launchpad.
Okay, let's start unpacking this then. Heaven, it's a new launchpad on Solana, also an AMM that's automated market maker, basically a type of decentralized exchange. And get this, since launching on August 15th, so like just over a week ago, they've hit nearly $350 million in lifetime volume.
350 million.
Yeah, in barely more than a week.
Yeah.
That's astonishing for something brand new, right? What does that immediate, almost viral traction tell us? Is the market just starved for new tools on Solana? It feels like more than just luck.
Well, it's truly fascinating, isn't it? And sources like Blockmates, Root Data, CoinLive, they all confirm these numbers. The speed of adoption is the key thing here. Such rapid volume suggests it's not just one factor, but maybe a perfect storm, a confluence of things.
Okay.
So first, yeah, probably strong pent-up demand for efficient launchpads and AMMs on Solana. People are looking for platforms that are fast, cheap Solana strengths, but also have good economics.
Right.
Second, you have to assume they did some really effective outreach. Built buzz, got liquidity providers, traders involved right away. They didn't just build it and hope.
They really promoted it.
Exactly. And third, you just can't ignore Solana itself. The blockchain's efficiency, low costs. It's the perfect infrastructure for this kind of high-speed platform. So for you listening, that $350 million isn't just a number. It signals a project that tapped into a real need, executed well, and instantly grabbed attention and, crucially, liquidity. Product market fit, maybe.
And it's not just vanity metrics, right? Not just big volume numbers floating around. This volume apparently translated directly into real protocol revenue, $3.8 million. Again, in that same super short time frame. Generating that kind of actual revenue basically from day one, that's significant.
Oh, absolutely.
So what does that mean for a young platform like Heaven? Does it give them a war chest? How does it position them in this, really competitive space?
Yeah, connecting to the bigger picture, $3.8 million in early revenue. That's a powerful statement. For these decentralized protocols, revenue isn't just nice. It's often key to survival, right? It lets them fund development, security audits, keep innovating without always needing external funding or just printing more tokens, those emissions that can dilute value.
Right, avoids that constant dilution pressure.
Precisely. So this immediate value capture, turning clicks and swaps into actual income for the protocol. It signals a potentially robust, maybe even self-sustaining economic model right out of the gate. It suggests they're not just burning cash, but actually building something financially viable. That's huge for confidence, for showing a path to resilience.
Okay, here's where it gets maybe the most interesting part. And it sounds, well, almost too good to be true sometimes. This God flywheel mechanism, Heaven's defining feature, 100% of all that protocol revenue, that $3.8 million, automatically goes to buy back their own token, LightGHT.
Yep, all of it.
That seems incredibly aggressive, a direct pipe from revenue straight back into the token. How does this God flywheel actually work? What's it supposed to do for LightGHT in the ecosystem?
Yeah, it raises that key question. How does this create this sort of cyclical growth? And are there downsides? So sources like Blockmates, Root Data, today onchain.com, they highlight this is designed as a powerful deflationary mechanism.
Meaning it reduces the token supply over time.
Exactly. The idea is to increase scarcity, hopefully boosting value. The mechanics are pretty straightforward. Heaven earns revenue from its launchpad, its AMM fees, whatever. All that revenue then gets used automatically to buy LightGHT tokens off the open market. The protocol itself is constantly buying.
Yeah.
And then often these bought-back tokens are burned, permanently removed from circulation, so less liquidity available. This scarcity, driven directly by platform use, should drive up demand and price, which then attracts more users, more projects, generating more revenue.
Which fuels more buybacks, a virtuous cycle.
That's the design, yes. A virtuous circle aiming for constant upward pressure on the token's value, rewarding holders, attracting new people. For you, the listener, it suggests a value proposition directly tied to how well the platform does.
But you mentioned potential pitfalls. That 100% number sounds great for the token, but does it leave anything for anything else?
That's the potential trade-off. Precisely. A 100% commitment is powerful for the token, no doubt, but it leaves zero immediate revenue for other vital things, like, say, a dedicated development fund, marketing pushes, unforeseen security costs, liquidity mining programs outside the buyback. If revenue dips because market conditions change, the flywheel slows down, and there's less immediate cash for the team to react strategically unless they have a separate treasury or raise funds elsewhere. It's very focused, maybe even a bit rigid.
Right, makes sense. But wow, it seems to be working like gangbusters in the short term anyway. The Light GHT token's market cap apparently jumped 550% in just 1 week.
550%.
That's explosive. Seems to validate the flywheel theory, at least initially, despite potential rigidities. But there's more. Nearly 48% of the total Light GHT supply is now locked. What does that signify? Half the token's basically off the market. Is that good for stability?
Yeah, what's fascinating, the Femex News noted this, is how that flywheel plus the market buzz translated into such huge value appreciation for Light GHT. That 550% jump reflects real confidence. But that lock supply, almost half the tokens, that's arguably just as critical, maybe more so for the long term.
Why is lock supply so important?
Well, lock supply means tokens intentionally taken out of active circulation. They might be staked, vested under contract, locked into liquidity pools. Basically, they can't be immediately sold. This massively reduces the available supply on the open market, making the scarcity effect from the buybacks even stronger.
Ah, okay. Less available supply means buy pressure has more impact.
Exactly. Think of it like supply and demand 101. Fewer tokens for sale means any demand from the protocol's buybacks or new investors has a bigger upward effect on the price. So for you, this suggests less immediate selling pressure, potentially a more stable price floor. It signals real conviction from early holders, people locking up because they believe in the long game.
So they're not just looking for a quick flip.
It seems that way. It indicates a significant chunk of the community is committed, which is a powerful signal for sustainable growth. It builds that foundation.
Okay, so it's not just the tokenomics. The team itself is making a big move here, really showing commitment. They've pledged to a 1-year token lockup for their own team tokens. And they changed how it works, moving from a linear unlock to something called monthly reinvesting, with a full 1-year lockup cliff, a whole year where the team can't sell any tokens. That feels pretty significant in crypto. Can you break down the difference between linear unlock and this cliff vesting? Why is it such a big deal for trust?
Yeah, it is a big deal. Femex, Root Data, CoinLive all reported on this strategic shift. Let's clarify the difference because it matters a lot for investor psychology. A typical linear unlock means team tokens get released gradually over time, maybe starting soon after launch, a bit each day or month.
Creating potential sell pressure the whole time.
Potentially, yes. It can create this constant small drip of selling as team members get tokens and might decide to sell. Now, this 1-year lockup cliff is totally different. No team tokens are released for the entire first year. 0. That's the cliff. After that year, then the tokens start to vest, probably monthly over some period.
Okay, so a full year of alignment.
Exactly. It's a powerful signal. For you, the investor, it means the team's financial fate is tied directly to the project's success for at least a year. They literally cannot cash out their initial stake before then. This drastically cuts down that immediate selling risk from the core team. It screams long-term commitment, aligning them with the community. It builds that shared destiny feeling.
That really does sound like a masterclass in building trust, especially in a space where, let's be honest, rug pulls are a real fear, where devs just vanish with the money.
Unfortunately, yes.
So this team lockup feels like more than just financial, it's a statement. What's the broader impact on how investors feel on the project's stability? Could this actually set a new standard for launchpads?
And that's the key question, isn't it? Could this become the expected standard? When a team locks up for that long, with a cliff, it sends an undeniable message. We believe in this long term. It directly tackles those fears of quick exits or rug pulls that have damaged the space. It's not just about reducing immediate sell pressure for price stability, which is important, It fundamentally bolsters investor confidence. People see the team is locked in with them. It encourages more patient, long-term holding from everyone.
Because the team can't just dump on them.
Right. In a market where trust is so easily broken, this kind of transparency and, frankly, self-imposed restriction from the team, it could absolutely set a new benchmark for legitimacy, especially for launchpads, where project quality and longevity are everything. It shifts the focus from quick gains to sustainable success. It's a huge psychological boost, setting a new standard in Solana's IDO scene.
Okay, let's zoom out a bit. Because Heaven isn't just existing in a vacuum, it's directly challenging Pump.fun, which has been, the big dog on Solana for a while. Capturing 3 of the top 5 most valuable tokens launched recently, and doing it so fast. That's a direct shot across the bow, isn't it?
Oh, absolutely. Head-to-head competition.
What does this rivalry mean for the Solana IDO scene, and how is Heaven pulling this off against an established player? Is it just the Flywheel, or more?
Well, the Solana IDO initial DX offering landscape is super competitive. Pump.fun, as sources like The Block, Fastbull, today on-chain mention, has had huge revenue and been the default choice for many. Heaven's rapid rise, grabbing those top-tier tokens, shows they're attracting not just any projects, but quality projects.
Right, not just quantity.
Exactly. It suggests their whole package, the flywheel, the team lockup, maybe a slicker user experience, better community building is really resonating with creators and investors. Maybe they offer better terms, a smoother process. Or maybe projects see launching on Heaven with its tokenomics as better for their own token stability long term.
Interesting angle.
And this competition, it's fantastic for the ecosystem. For you, the listener, it means more innovation, better platforms, more choice when looking for new Solana projects. It forces everyone to up their game.
And the numbers really drive this home. Phoenix News reported Heaven launched almost 9,000 tokens, 8,970 to be exact.
Incredible number.
And grabbed 28% market share already, almost a third of the market in, weeks? That's not just competing, that's reshaping the landscape. How do they do that so fast? And what does it mean for Pump.fun?
Yeah, that scale and speed, nearly 9,000 tokens, 28% share. It points to something fundamentally appealing about Heaven's offering for project creators. It could be a superior user experience. Maybe it's just way easier or cheaper to launch a token on Heaven. Faster deployment, lower fees, better tools, perhaps.
Makes sense. Frictionless experience wins.
Or maybe it's the perceived value of launching there. Like we said, maybe the Lightchash, Flywheel, and Team Lockup make projects feel their token will have a more stable launch environment on Heaven. Which raises the big question, is this a sustainable shift? Will Heaven actually dethrone Pump.fun? Or maybe they cater to slightly different niches. Pump.fun is known for those super fast, sometimes meme coin launches.
Right. Maybe Heaven attracts projects aiming for more perceived legitimacy.
Could be. It really depends if Heaven can keep innovating, keep attracting quality projects, and keep that community strong. But for Pump.fun, the message is clear: adapt or risk losing ground. This competition is pushing Solana forward.
So this God flywheel, while innovative for Heaven, isn't totally out of the blue. You mentioned it takes inspiration from Hyperliquid.
That's right.
Which uses a similar revenue-driven model, 97% of fees buying back their HYPE token. What's the benefit of borrowing a proven idea like this in crypto instead of trying something brand new and risky?
Well, it's a really smart strategic move, as detailed by sources like The Block, Blockmates, and Phoenix. Crypto innovation is often high risk, right? Lots of experiments fail. Hyperliquid, which is a derivatives exchange, has already shown that using a big chunk of revenue, 97% of their fees to buy back their token, HYPE, actually works. It creates that positive feedback loop, drives value, aligns incentives.
So it's de-risked the concept.
Exactly. Heaven takes that core idea, direct revenue to token feedback, and applies it to their niche, Launchpad and AMM. By using a proven blueprint, they reduce the massive risk of their core economic model just not working. They can leverage Hyperliquid's proof of concept and focus their own energy on building a great platform, user experience, community. Rather than gambling on entirely untested tokenomics, it shortcuts the learning curve.
Smart. Don't reinvent the wheel if a high-performance engine already exists. But surely they adapted it, right? Launchpads and AMMs are different from derivatives exchanges. Is it just a copy-paste, or did Heaven add its own spin, like that 100% buyback commitment?
Yeah, it's definitely not just a copy-paste. That's the key point about innovating on existing models. While the core idea is similar revenue buys back tokens, the context is different. Heaven's revenue sources are probably more varied than just trading fees. It's launch fees, swap fees from the AMM, maybe other ecosystem activities. So the fuel for the flywheel comes from different places.
Okay.
And that 100% commitment, that is a significant step up from Hyperliquid's 97%. It signals an even more aggressive focus on deflation and value accrual for light GHT holders. Maximum dedication.
Potentially amplifying the effect.
Potentially, yes.
Right.
But again, remember the trade-off. That 100% leaves less immediate revenue for other things unless they have separate funding streams. So yes, they borrowed heavily, which was smart, but they've clearly adapted, intensified, and refined the model for their specific market and to make a really bold statement.
Mechanisms, impact, and future outlook.
Okay, for you, our listener, who likes getting into the nuts and bolts, let's visualize the finances here. If we charted Heaven's weekly volume against its cumulative revenue since launch, and maybe graphed the frequency of those light GHT buybacks against the token price, what patterns would we likely see? How would visualizing this help us understand that flywheel better?
Oh, visualizing it would be incredibly telling. Charting weekly volume and cumulative revenue, you'd almost certainly see that classic hockey stick curve.
Steep initial growth.
Exactly.
Yeah.
Reflecting that exponential takeoff, the $350 million volume, the $3.8 million revenue appearing very quickly, it would visually hammer home just how rapid their start was and how efficiently they turned activity into income.
And the buyback chart.
Graphing buyback frequency and size against the light GHT price. Theoretically, you'd expect a strong positive correlation. More revenue means more buybacks, happening more often or in larger amounts. And those buybacks, creating demand and scarcity, should generally correlate with periods where the light GHT price performed well. It wouldn't be perfect, markets are complex, but it would visually demonstrate the flywheel mechanism at work.
You'd see the engine turning, basically.
Pretty much. It would provide that empirical link between platform success and token value, but of course it also raises the question of sustainability. Can that steep curve continue? Visualizing helps grasp the how behind the success.
Right. And beyond Heaven's internal metrics, that comparison with Pump.fun feels essential for context. If we put their numbers side by side, tokens launched, revenue, market share, what would that tell us? Where's Heaven's edge?
Yeah, that side-by-side comparison is crucial for understanding the competitive dynamics. Looking at tokens launched, Heaven's 8,970 numbers suggest they're incredibly competitive right now, maybe even outpacing Pump.fun recently in sheer quantity.
Suggests their launch process is attractive.
Exactly. In terms of revenue, Pump.fun likely has a higher total historical revenue, being older. But Heaven's recent velocity, that $3.8 million in a week, shows incredibly efficient monetization and poses a serious threat to Pump.fun's current earnings dominance.
And market share.
Well, that 28% figure for Heaven explicitly quantifies their immediate impact. It shows they've carved out a huge slice of the market incredibly fast. So for you, this comparison isn't just numbers. It shows Heaven isn't just another Launchpad. It's a disruptive force, changing the competitive landscape on Solana, forcing incumbents to react, and offering real alternatives. It highlights how quickly leadership can shift in crypto.
Okay. Pulling it all together.
Sure.
In crypto, trust and long-term viability are everything, right? Especially for new projects. The source stresses this combo, the powerful God flywheel for economic incentive, plus that strong team lockup for trust. How do these two things really work together to create something more robust for LIHT? It feels like they multiply each other's effect.
That synergy is precisely the point, and it's what makes Heaven's approach so compelling. They're hitting both the rational and emotional buttons for investors. The God flywheel provides the clear economic incentive. It's a programmed, transparent promise. Platform success translates directly into token scarcity and potential value increase through buybacks. It answers, why should I hold this token financially?
Makes sense.
Then, the team lockup provides the trust incentive. It addresses the governance risk. It shows the team is committed long-term, their own success tied to the project's future, not just a quick payout. It answers, can I trust these people not to dump on me?
Right, it removes a major fear factor.
Exactly. So together you have this narrative, an innovative economic engine designed for value accrual, run by a team demonstrably locked in for the long haul. Investors aren't just buying into a mechanism, they're buying into a committed team in that mechanism. It addresses both the what and the who, which is incredibly powerful for building confidence in such a volatile market. It makes you wonder, for you listening, which carries more weight when you evaluate projects, the clever economics, or the demonstrated team commitment. Both are vital, but maybe one resonates more.
That's a great question. And beyond just confidence, the idea of reducing sell pressure and setting a new standard. How critical is controlling sell pressure in crypto? And could Heaven really be changing the game for Launchpad legitimacy?
Reducing sell pressure is absolutely fundamental in crypto. We've all seen tokens collapse under heavy selling, especially from early insiders. It can kill momentum and trust instantly. By taking team tokens completely off the table for a year with that cliff and simultaneously creating constant buy demand with the 100% revenue flywheel, Heaven is actively engineering stability. They're building defenses against volatility right into the core design.
It's proactive, not reactive.
Precisely. And connecting that to the bigger picture, could it set a new standard? I think it absolutely could, especially for launchpads. It shows a path that combines innovative tokenomics with transparent, long-term team alignment. It moves beyond just hype towards a model built for longevity and shared success. If projects see Heaven succeeding because of this approach, it could pressure others to adopt similar standards of transparency and commitment to game investor trust. It might just redefine expectations.
Okay, so this isn't just about Heaven. It's a story about Solana too, right? A major new launchpad succeeding like this.
Yeah.
What does it mean for the broader Solana ecosystem?
Oh, it's a huge positive signal for Solana. A thriving, innovative launchpad like Heaven acts like a magnet. First, it attracts new projects to build on Solana. It gives creators an efficient, appealing place to launch, bringing more innovation and diversity, DeFi, NFTs, gaming, whatever, onto the network.
More building blocks.
Exactly. And second, it drives network activity. More projects, more token swaps on the AMM, more user engagement. It all translates into more transactions, more fees, demonstrating Solana's utility and scalability. Which raises the question, will Heaven's success help accelerate Solana's growth as a top DeFi and innovation hub? It certainly strengthens the narrative. The increased activity and competition makes Solana more attractive globally.
And does this fierce competition, Heaven versus Pump.fun, signal Solana's DeFi scene is growing up, maturing?
I think it absolutely does. A robust, competitive launchpad scene is a hallmark of a maturing ecosystem. It's not just one dominant player anymore. This competition forces everyone, Heaven, Pump.fun, any others, to innovate, improve services, build better, more sustainable models. That iron sharpens iron idea.
Better for everyone in the end.
Exactly. For you, the user or developer, it means better projects, more reliable launch platforms, a stronger overall ecosystem. It shows Solana is evolving beyond just potential into a serious competitive environment for building and investing in decentralized finance. It signals health and vibrancy. Outro.
Wow. What a deep dive into the Heaven Launchpad. We've seen this really meteoric start, that huge volume, the clever God flywheel, buying back tokens with 100% of revenue, and that really significant team lockup. It's not just numbers. It feels like they're actively reshaping how new tokens launch on Solana. It's this fascinating mix of super fast growth and, well, serious long-term thinking.
Indeed. Heaven's story really highlights that crucial balance, doesn't it? You need the innovative tokenomics designed for value and scarcity, but you also need those strong governance principles like the team lockup to build sustainable trust. It's a really compelling case study showing how quick execution, when combined with a real focus on investor confidence, can let a newcomer challenge the old guard almost overnight.
So for you, our listener, as you mull over Heaven's strategy, it's challenge to the status quo. Here's a final thought to chew on. Do these kinds of models, the 100% buybacks, the strict multi-year team lockups, do they truly represent a more resilient, more trustworthy blueprint for crypto projects going forward, a way to move past pure hype? Or is the sheer volatility and unpredictability of crypto, the market swing, the changing regulations, destined to test even the most carefully built economic and trust systems? Could there be unforeseen cracks down the road? Lots to think about there. We hope this deep dive gave you some valuable insights.